In further developments, the Competition Commission has reported a modest decrease in some of the prices on food items it tracks. The latest essential food pricing monitoring report has found a more responsive price for sunflower oil. Meanwhile, the producer to retail spread of canned pilchards has been on a downward trend in the last 6 months. Egg producer prices are currently cheaper than they were in 2023, and lower average retail prices for brown bread have been observed during this period under review. Principal economist at the Competition Commission, Khalirendwe Ranenyeni, speaks to us about this. Thank you so much for your time. Let's unpack this entire reading. What have you seen in terms of the work that the Competition Commission has now tackled with regards to the pricing of goods and much needed goods for South Africa's struggling consumer base?
Thank you so much for having me this afternoon. Indeed, we have been monitoring these products, as we have said previously, and these are the most important products in our view, your essential products: bread, chicken, and eggs, brown bread in particular. And what we have seen, I think, as you've said, is that we have seen positive signs from our processors and retailers in response to our work. We have seen that they are able to now much quicker translate cost savings from lower input costs, and we are seeing that translating into shelf prices. We have seen, however, for some products like sunflower cooking oil and brown bread, that translation is not as quick as we would like it to. So, for example, with brown bread, we have seen in the past year a downward trend in wheat prices, which means wheat as the input cost or the main input to bread production is now lower. But we don't see the processors reducing that price, responding to that wheat. Similarly, with cooking oil, we are seeing sunflower seeds as a commodity. Their pricing is reducing. We're seeing producers responding in that way, but we're not seeing retailers reacting in that way. So the work has been good, and we are seeing positive signs from stakeholders in some of the food items.
Let's talk about some of the impediments that may have been faced in this process that would lead to some producers maybe moving slightly slower than what would be expected.
So initially, some of the reasons that we would get when we interact with stakeholders and processors and retailers would be supply side costs, so people would quote things like load shedding. Now that has been suspended, well, at least it was suspended for the bigger part of the period that we were reviewing. They would quote things like unfavorable exchange rates, fuel prices that are high, but all of those costs have kind of been contained. So we are really interested, particularly for food items that we are flagging as of concern, to get stakeholders to explain to us what exactly could be the problem. In our observation, when we looked at maize prices, you recall late last year around October, there was a 60% price increase in white maize prices. Shortly after that, I think around February, we saw a deep decline. So that price quickly came down. And such volatility, we were quite interested to know what exactly causes such and how does it translate to the price that you and I see on the shelf. One of the issues that is coming out clearly is the fact that there are lots of transactions that are not happening on the main exchange, which is the SAFEX. So because some traders export this product, which we saw in the last 6 months, that given the summer drought that we experienced, our neighboring countries, Lesotho, Zimbabwe, doubled the exports of white maize, which meant a lot of demand. There was an increase in demand, which meant quite a few transactions actually went off the exchange. Now, that information has not been filtered into the exchange, and some of the prices we see, there's a delay in prices because of the information that's not been translated in real time. So that's one of the issues that is being quoted as the reason for price volatility. Another issue really is the issue on like I said, high demand. So often when you ask farmers and processors exactly why do we have high prices, they will tell you supply side issues. So they will tell you the cost of fuel, the cost of electricity or load shedding. But what we did observe, at least in this edition's deep dive, was if you look at the opening stocks of maize, white maize in the beginning of the seasons, it was quite clear that we would have a shortage. We didn't have a shortage, lucky enough. We were even able to supply to our neighbors. But it was quite clear that supply was not where it usually is. So ideally, you would have expected that the price would have responded in that manner. But what happened is once the drought hit the other countries and exports from the other countries increased, we then saw the spike in demand cause a spike in prices for ourselves in South Africa. So what that means is, although South Africa itself was not in a shortage, the market behaved as though there wasn't enough in South Africa. So we observed that some of the things that need to be taken into account whilst explaining price dynamics is things like demand shocks. A quick increase in demand of a product can also cause a price rise.
Intricate dynamics that you've just outlined, and shortly as a parting shot, I'm also interested in whether the Competition Commission is anticipating the slow pace in this regard, and maybe let me say the moderate and marginal pace in which price differences are changing to continue going forward. Speaking on the side of a South African consumer, many of us would want that to accelerate.
Yes, indeed. I think our call to stakeholders has always been that we request or we are calling for a quick response. So when prices increase, when input prices increase, we do expect that retail prices also increase. But we expect the same when they decrease. And that has always been the concern, that the increase is much quicker. But when prices actually decrease, you don't see the decrease. And this is why our food prices stay at a level that is unsustainable. That is why food levels are very high, because they don't react in the same manner at which they reacted when the cost increased. So we are quite comforted by the positive signs we see, and we are calling upon processors, other regulators and retailers to continue responding appropriately and transmitting these prices to retail prices as fast as possible.
Thank you so much for your input. That was Principal Economist at the Competition Commission, Khalirendwe Ranenyeni, talking to us about the latest monitor when it comes to price increases for food.